there, you're watching the weekly edition of Your Trades on ET Now. This is Priyanka Uppal and along with me Snehi Shah. US presidential elections, persistent FI selling, Fed outcome, and of course the earnings, last leg of earnings. So many events which we had to digest. So much our markets have gone through, and net what we have seen is that we are down with on Nifty, we're down by 0.5%. Mid cap paired, the gains they built on to nearly 1%, but today it was a bad day for mid cap, and of course small cap, they got the maximum of the hit, 1.6% cut what we saw on small cap. But then a lot of sectors which we saw were buzzing on the big event, which was the US presidential election. Trump win, which took the entire IT pack over the moon. Nearly 4% of gain what we saw on the IT index, majorly led by the large caps and in fact a lot of mid cap. In fact, whole IT pack was buzzing. The sector which lost the most during the week was reality sector, losing nearly 4% with stocks like many of the stocks were in fact, if you talk about almost all the packs were trading with a negative bias. It's only the handful of the sectors which are considered to be the Trump winning sectors, be it OMCs or IT or pharma or maybe to some extent defense. These were the sectors which were majorly on the winning side. But of course, earnings slowdown which we saw in many of the spaces, of course, like majorly the commodity side. If you talk about cement or chemicals or energy, the kind of earnings that have come in, that also drew a picture for Q2 earnings this week. A lot of events, a lot of brokerage notes what we saw during the week, and of course auto pack which completely, the auto dispatch which completely failed to cheer the markets. The kind of slump we saw on stocks like Bajaj Auto or Hero MotoCorp, despite even posting good numbers. But M&M was a clear outlier throughout the week. The top gainer on Nifty was M&M with gains of more than 6%. Brokerages turning bullish, in fact raising the target price, and majorly on the back of the revival from the tractor space, SUV growth intact. A lot of action this week, in fact.
Absolutely, and like you said, Priyanka, it's been a data-heavy week for us. It's been an event-heavy week for us to digest. We also had the auto sales data that came in on the 2nd of this month, and you also had a slight delay on the back of the Diwali motor trading and all of that coming in. So numbers trickled in a little later, but all in all, it looked like a good set coming in from the auto majors. We have commentary that said from players that recovery is being seen, so the auto pack seemed to do well. You also had the big news coming in from the Supreme Court on the liquidation of Jet Airways, the airlines business, so that was a big hit that the stock took as well. On the back of the MSCI rejig, now remember this announcement came on the 6th of November, but the adjustments will be taking place on the 26th of this month. You had Adani Energy that suffered a very harsh blow, 10% lower in trade on Thursday, further 3% cut coming in on Friday on that stock as well, on the back of the exclusion that it saw from the MSCI pack, and there was hope on the street that it would be included, but that announcement did not come through, and Adani Energy is a stock that did pretty well. Lastly, just want to flag off the action and the exuberance that we've seen in the primary markets this time. This week, in fact, you have Swiggy, Acme Solar, you have Niva Bupa, all of these IPOs subscriptions were open. Next week, you have 4 new D-Street debuts happening, so let's see if they're able to hold ground amid a shaky market. But on that note, let me take it across to our experts on the show today, and on the fundamentals today, we have Mr. Ajay Bagga joining us, and on the technicals, we have Rajesh Palvia of Axis Securities also joining us. Gentlemen, thank you so much for joining us. And before we take stock of what the levels could be going into next week, Mr. Bagga, I want to come to you, and I have to ask you this big question that's on everyone's mind right now. After the big Trump triumph that we could call, how much of this impact is going to be positive for India, and what sectors, what stocks, what pockets of this market are likely to benefit from what's happened over in the United States?
See, overall, a Trump victory is positive for India. That goes without saying. Much better than a Democrat government, but it's a government for the US, so we have to see that it will be enlightened self-interest on both sides. But relationships do matter in international politics. In terms of sectors that will do well, straight away, oil and gas should do well, and you should see lower oil prices, lower commodity prices around the world. That will help our markets. some amount of pharma as they try to tackle their huge healthcare bills. Of course, on the other side, they have said 20% tariffs on all imports. So all Indian importers could face something like that. Looks like a small probability. It might have been a negotiation tactic to open up other markets for US goods and services. We'll get to know that by March. Jan 21st is the inauguration, and expect a lot more action on the immigration fund, on the anti-China front. And India could be given some time. Normally, they have the leeway to give a country a year or 6 months while they negotiate a trade deal. So India could get some time. Overall, the move in India would be more into defensives. We have the issue what Priyanka mentioned. I was really counting. I said, if your research department and all of you talk so well, we fundamental guys can really not make too many of comments. So only thing I can add is the Chinese NPC, which has announced a 1.4 trillion dollars local debt swap, but that takes place over 5 years. It's underwhelmed the market, so expect Chinese stocks to go down further, which is mildly positive for us. But the big issue for India right now is continued FI selling. And until that abates, it's very difficult for our markets at these valuations with these earnings to move ahead, Trump or no Trump. Overall, Trump with a strong dollar will be mildly negative for the EM flows. But what we expect is Trump's stated position is a weak dollar. So expect him trying to talk down the dollar and expect some actions from the US Treasury to try and weaken the dollar. They don't want a strong dollar either. So that could help EM currencies and EM flows eventually, but that's a second order effect. We'll see that around March, April.
So brilliantly put up, Mr. Baga. Thanks so much for collating all the important points for our viewers. In fact, I will come to Rajesh also, but just a follow-up question to you only, Mr. Baga, because the way you mentioned that, of course, a strong USD. This means this will have some ramification for India also. Or maybe to a minor side, but then of course the valuation realignment could continue. That's one cause of concern. And the second cause of concern, what we saw in the earnings which have so far reported in Q2, what we have seen is a lot of facts, the 90% of the drag coming in from commodity side. In fact, if you talk about factors like rains, or maybe you talk about factors like slow government capex, but the spaces which have felt the heat is majorly the commodity side. How do you think? Is it largely these factors are over by this quarter, or is this drag going to be there for some more quarters?
It's going to be there for some more quarters, Priyanka. Big issue is China. So until Chinese demand really recovers, and we were expecting them to come out with a much broader package today, they have tried to address the hidden debt on the local governments. As I mentioned in one of our earlier discussions, 36% of local government revenues in China comes from property, and that's a sector which has suffered for the last 3 years. So local government balance sheets have been bleeding, and they are in a constraint to continue their governance. So the central government is helping them, but that just helps to refinance existing debt which has been spent. What we needed was a big bang infrastructure spend out, which didn't come today. So expect some disappointment on Monday for the entire commodity complex. For us, it's good as importers of commodities, but our commodity plays also will feel the heat to some extent. Secondly, China, as it gets higher tariffs in the US, will start dumping its goods, both commodities and finished goods, all over the world. And India will face that issue in terms of pricing. So not a very clean situation. We are in a spot of bother as a market, and the world economy has got some volatility coming its way with Trump 2.0.
Thanks for that view. Rajesh, I'm going to come to you now and give us a sense of the outlook that you have heading into next week, given everything that's been happening globally as well on the back of the rate cuts that we've seen from global central banks. You also have the Trump factor playing in. And also back home, when you talk about the fundamentals on the earnings front, we've seen a rather weak to mixed set of earnings coming in. So what's your outlook on the levels that we can watch going into next week, and what is the major resistance and support level that you're watching out for, especially on the Nifty?
Looking at the near-term, short-term structure, we still believe that, furthermore, pressure we could see in the market as Nifty has almost closed near to 24,100. That's the critical level for the Nifty, whatever pullback which we have witnessed in the last couple of days. In the derivative data also, there is a long unwinding is placed. If it slips below to 24,100, I think this fall can extend further. Since last 10-15 days, Nifty is trading below 250-day as well as 100-day moving average, so which is also adding up the bearish sentiment is still there in the market. And whatever pullback we are getting in the market is not getting any kind of follow-up buying action, as most of the sectors are witnessing supply pressure. None of the sectors are able to give any kind of support to the Nifty in any kind of pullback action. So we believe that if it's trades below 24,100 in the coming week, possible down move again can retest the previous swing low around 23,800. That's the next level where Nifty can again slip below. On the higher side, 24,350, 24,400 are the major, resistance area. Until the Nifty not crosses 24,400, I think comfort won't return on the street in terms of Nifty as well as in the sectoral indices. So 24,400 needs to cross on a weekly closing basis. Then only we can see some short covering action or some, follow-up buying action. Till then, sell on rise is the strategy for Nifty. Even for Bank Nifty, today's close is again near to the critical support area of 51,500. That is the next, that is the important put based concentration. But again, in the today's data, there is a short built up on the derivative side for Bank Nifty contract. So, and almost Bank Nifty is now negotiating with its 100-day moving average. So I think if it's sustained below to 51,500, we could see furthermore follow-up selling in the coming week towards 51,000 level. For Bank Nifty, 52,000 is the critical level. Bank Nifty needs to cross 52,000 level on a weekly closing basis. Then we could see some short covering.
Okay, so we've lost your voice, Rajesh. We'll come back to you. Maybe we fix this up. But then what we understood is that you are waiting. You're waiting to watch out for a key level to before taking any long bets. We come back to you. We stay for a short break here. Both of Ajay Bagga and Rajesh Palvia are here with us. Don't go anywhere. Welcome back. You're watching Your Trades on ET Now, and we have Rajesh Palvia and Mr. Bagga with us to talk about the weekly performances, the big cues to watch out for the coming week. Rajesh, I'll come to you. Thank you for being so patient with us today. What we understand is that FI's long positioning on index future is still not changing. We're still sitting at a lower levels of 24% nearly. Retail, though, has stood tall in front of FIs so far in all these 29 sessions, but a huge quantum has been already sold into some 1.42 lakh crore we have sold. But if you look at the November seasonality trend out of the 10 years past, the years which have gone by, now the historical trend has shown that November month is fairly a good month for mid cap, small cap, even for Nifty and Bank Nifty also. But how much are the chances that this positioning, this trend could play out?
So looking at the current scenario, I think Priyanka, the first half of November is looking still, tough for any kind of recovery. I think till 15th of November, I think this new regime of derivative weekly expiries, this all going to change in the mid of November. So I think a lot of adjustment is going to take place from the trading point of view also. So I believe that, first half of November would be still tough for any kind of recovery. Maybe we could see some recovery in the second half of November. So I think we should still wait for, because still there is no sign. But if I compare with the derivative universe compared to the cash segment, I think cash segment is still now trying to get some buying interest in a selective pocket. But in the derivative universe, I think most of the stocks are witnessing the supply pressure. So I think still there is tough time for any kind of recovery in the first half of November.
Okay, Mr. Baga, I want to come to you and get a sense of how you would recommend to play the entire consumption space, because if you take a look at core FMCG, we've seen a mixed set of numbers coming in, rather varied coming in all across, but the commentary is constant that there's a slip in urban demand, however rural seems to be doing well. So when you take a look at consumption as an entire space, would you rather play it with core FMCG companies? Would you rather play it with retail companies? Or what's the outlook there, and what's your recommendation on this front?
Core FMCG. The
Okay.
contrarian call is FMCG staples because they are so underliked or disliked in the market right now. And consumption will come back. Consumption will come back as the government spending has picked up in September. We don't have many triggers now to really push a Santa Claus rally, unfortunately. So we'll have to wait for December to go through. I think the FI reversal might take till new allocations come in the new year. And then you have a big event of Trump inauguration in the last 10 days of January. And what does he do in his first 1 month or so? So I think FI reversal might take till February. That's bad news. The good news is I think earnings start improving from here on. So we are not going down further from here. We might have hit a bottom on the earnings, and from here it starts slowly recovering. And consumers could be a good play to start with.
Okay, all right. So core FMCG is the space that Mr. Bagga is keeping a check on. But then with this, Rajesh, coming to you, please tell us which are the sectors you're bullish on for the coming week? Any specific recommendations you have for our viewers?
In terms of sector, I think IT is the only space and pharma. These two spaces are still showing some bit of buying interest. But again, in IT, we have seen that mid-cap IT have done well. So here we could see some traction in the coming week. And selective pharma stocks are also showing buying interest. So I think these two sectors are still holding the ground. So we believe that here we may see some traction on the buying side. For the stocks for coming week, one short, one long. Short idea is from the real estate space, that is Godrej Property. Now stock has slipped below to 200-day moving average. In the today's session, stock broken its important support area, multiple support area on a weekly closing basis. There is a short built up on a derivative data. So we believe that Godrej Property may continue furthermore fall from the current level. We are projecting target towards 2630 on the downside. One can go short with stop loss of 2710. The long idea is on Paytm. Very strong buying action in last couple of weeks. Stock is moving in upsloping channel. That is clearly indicating that there is a sustained buying action is taking place in Paytm. So I think Paytm can extend its gain in the coming week. One can look to buy this stock for upside target of 890 to 900 with stop loss of 835.
On that note, it's a wrap on this edition of Your Trades. Mr. Bagga as well as Rajesh, thank you so much for taking the time and joining us. Now, well, next week is a truncated week. We also have a lot of action coming in. CPI, WPI, 4 IPOs listing. It's going to be a data-heavy week. We're looking forward to it, but we're going to take a break on the weekend. We'll see you on Monday. Thank you so much for watching.